For those of us that are just joining for the first time, you don't know who I am. Um, in this morning lessons live this evening, I'm going to be sharing slides. So this is unique. This is the first time I'm doing a slide on morning lessons live. So this is very important. What I'm going to be sharing with us. That is why I'm here with the slide. So I've been actively investing for about 5 years now and more, and I've been teaching investing for over the last 3 years. So I'm not a newbie in this game of investing. I didn't just wake up to decide to start teaching about investing. This is something that I have, strong affinity for. I've spent a whole lot of time doing studies, doing research. I've also invested and learned from my own mistakes. So what I teach when it comes to investing is not just theory or something that I've Googled and copied or because I read Rich Dad Poor Dad or Cash Flow Quadrant. I'm now teaching you guys. No, this is something that I have experienced. So every other thing I'm going to be sharing with you this evening are stuff that I've implemented. So I have a fair share understanding of how to work. I've made my own bad investments decisions. I've lost money. I've made money. It's been a beautiful journey ever since I started the game of investing. Okay, so this is my investing journey. I think that going forward, I'm going to be sharing this so that some of us can understand, okay, what this investing game is about. Because sometimes when I talk about it, um, not many people understand. So they think that investing is like this, investing is like that. I've had to talk about investing to some certain individuals this evening. In fact, not just this evening, this week. And some of them, I told them to come to join us this evening on Morning Lessons Live because they didn't have, a good understanding of what investing is. And that's because we have been sold the wrong message over the years. Some of us started investing based on the fact that a friend or a family member told us of an opportunity where we can make our money, double or maybe even triple. So we just think that investing is doubling money. So when we hear investing, we think about money doubling, but that's not it. Okay. So investing, you're going to find out what it really is. But before I talk about what investing really is, so this has been my journey over the last 6 years. Yeah, from 2012 to 2015. I was telling this story to a friend recently of how my first investing experience. It was actually my mom that found an opportunity, or the opportunity found that somebody told her of how she can invest, somewhere and get a capital back plus 50% interest in 15 days. It was a beautiful experience, awesome. I think what she did then was about 50K or 100K. And because it was a physical place, office where you needed to go and deposit the money, she sent me, right? So I went there with the slip. I submitted the slip. I submitted the money, and they gave me a receipt of which I was supposed to come back. So the first time, they paid my mom. I went back second time. I decided to try it for myself as well, and I did the first time 10,000. I got 15,000, and then the second time I decided to increase it to 20K so I could get 30K, and that was it. So that was my very first experience of what a Ponzi scheme was. And it's only too bad because, like I said, it was just 20K, right? Equivalent of about $120 today. If now, if today I didn't have that kind of experience in 2012, I would have lost maybe millions of naira or even more compared to what some people have lost today. So I always tell people that fail early, right? This thing that's called investing. Sometimes it's good you start early so that you learn early. When you start making the big money, you will not make the mistakes that you're making now. Some of the decisions I make around money and investing is because I've had those experiences in my very, very early years when I was making very, very minimal money. Okay, so it's very important that you start early. So don't joke with the opportunity that you have today. Don't think that you're going to have time in the future to invest. You're not going to have more time in the future. The only time that you have now to invest is now. So if you're not investing now, you are leaving a lot on the table. Okay, so I left that Ponzi scheme in 2012, and I didn't do any other Ponzi scheme up until 2015. I found something called Cool Naira. I think Cool Naira then needed to donate 500 Naira or 100 Naira, and then you keep sharing your links. And they said that when people watch adverts on a particular website, that they share the ad spend with us. It made sense to some extent because they were showing some adverts on the website, but I later figured that they were not making as much money from the advert on the website than the referral. Like, when you refer somebody, the person will donate, and the person refer another person, the person will donate. So they were making more money from the pyramid scheme than from the traffic to the website. So not long, maybe less than 6 months, it crashed. So just like I expected. And then I decided to try long reach. This was within my NYC 2016 thereabouts. And I registered. I thought that I was going to be given 2 downlines to make my journey easier, but my upline deceived me. So after registering, she didn't give me any downline. So I was left alone to my own fate. you know, I tried to convince some people about joining long reach network marketing. Thank God that I didn't lose in this case because I had the soap, I had the cream, and what else they give? They gave me some other things. And so in my quest for understanding network marketing, because long reach was network marketing scheme, I found AIM Global, something like that. But I didn't register. Just when they were doing the onboarding, I think it was the seminar I attended in Abuja, and they were saying the same thing, similar to what iCharity was, not iCharity, I mean long reach was about. Guys, almost the same thing, just different names. I walked away. My upline called me for many weeks and I never returned. So because I didn't have the confidence to sell products, I didn't progress with the iCharity, with the long reach, right? I found iCharity some months later. Now the difference with long reach and iCharity is that there was no product. So it seemed easier, right? There was no product. So I said, okay, let me start doing this iCharity stuff. It took me a while before I could get my first downline. My first downline called me from far away. I can't remember the state he was. He called me. I was like, are you sure this thing was legitimate? I think it was about 5,500. It was $10 you needed to, is it $10 or $20? I can't remember exactly, but when I convert it, it was about 5,500 that I donated to my upline. 1 month later, I got my first downline, and it made sense for a while. I ran iCharity, for about 2-3 months before it collapsed because people were not patient. And this is part of what I've learned over the years. Many Nigerians, when it comes to making money or multiplying money or investing in quotes, are not patient. So what I promised people back then was that if you join my scheme, if you join under me, I would get you 2 downlines. I said I would try to get you 2 downlines. Not like I haven't guaranteed it, right? So in the first few weeks, it worked. As people were joining, with my link, I was giving them downlines, or to the point where the pyramid scheme became too big or too wide at the bottom. And this is something that we need to understand. In my community this evening, I was talking about economics. Why Ponzi schemes fail is not just because the people that are organizing get greedy. It's because it becomes unsustainable. When one person brings 2 people, that's one person. Those 2 people bring two people, that is 4. Those 4 people bring 2 people, that is 8. Those 8 bring 2 people, that is 16, and keeps widening. As it gets down the scheme, you have more people at the bottom. So it is only the people at the top, the people that join early enough, that benefit from it. So all pyramid schemes would eventually crash. It could crash maybe first 1 week, first 2 weeks, first 3 weeks. It just depends on how sophisticated the whole scheme is. So you have then the MBA Forex, the Omega Pro. All of those are different kind of Ponzi schemes, pyramid schemes that have come and gone. So after HIT, I did Zafon. Zafon was Bitcoin. I did paid rockets. In fact, it was very interesting. 2016, I was like a Ponzi kingpin. Paid rockets in India, they contacted me to make me the upline. So amongst 4 uplines in Nigeria, I was made one of the uplines. So when people were signing up on the website, they were automatically being paid to pay me. I think it was 1,000 or 2,000 then. I received several alerts in 2016. And I got tired. In 2017, my friend and I were trying to, design our own scheme. We actually succeeded in doing it, but we did not launch it because at that point in time, I figured that this was not sustainable. Even if I make money, some other people would get to lose money as well in the process. And because I'm not a selfish person, I'm not just all about making money for myself. I considered the fate of other people. So I stopped. I told my friend that, man, I'm not going to go ahead to launch this scheme. We spent about $1,200, designed the website. It was similar to Bitcoin Gates. Some of us that were involved in all this MMM Express and Co. in 2017 will remember. But we did not launch. It was around March or so. It was ready to launch. I told him, I'm not doing again. In April, no, before, in that same March, I washed my hands away from Ponzi schemes. I said, I'm not doing again. Apart from Ponzi, there was what they call high yield investment programs where you invest $100 and get maybe $200 within a three months period. So just think of any kind of money doubling opportunity. Ogochukwu has done it. This is why from afar, any scheme that's presented to me, I can tell you that this is a bad investment opportunity without even going to go and do any research, because I can think like the Ponzi scheme organizer. Not because I can, because I have thought like them before. For you to be able to design a pyramid scheme, you must have been able to think like Mavrodisegui at some point in your life. So even when they present it in such a way that it looks very sweet and enticing, I can see the loopholes. This is why I told people that care to listen in 2019 that Omega Pro, MBA Forex, Chinlax. You can see I didn't list all of those things here because in 2017, I actually retired from Ponzi scheme. Like since 2017 to today, I've not been involved in any Ponzi scheme. That is over how many years now? 2017 to 2025, more than 8 years. No Ponzi scheme. I've not lost my money in any kind of bad investment opportunity since 2017 to date. So that is enough knowledge, enough confidence, enough information for me to say that, guys, come and listen to Ogochukwu. He has been there, he has made his mistakes, and he doesn't want you to make same mistakes again. My biggest joy in doing all that I do for money lessons is that people do not make the same mistake that I made. Some people say experience is the best teacher. I don't believe that experience is the best teacher. If I had money lessons 10 years ago, somebody telling me about investing, there's some investment opportunities I wouldn't have attempted. But because I had nobody to tell me about investing, I was in trial and error. So I tried different things. In 2018, 2019, we tried Agro Partnership, Farm Crowdy. All these were legitimate investment opportunities. Agro Partnership and Farm Crowdy. I've said this in the ML community, even on Facebook, some months ago or years ago, that these schemes were legitimate, but the founders destroyed it due to poor financial decision making and lack of the ability to manage big money. It's very easy to manage 10 million, but when it now comes the time to manage 100 million, you need a different set of skills. A very different set of skills. That is why you see some fintech apps are collapsing. They are shutting down. Why are they shutting down? Because matter is bigger than them now. They can't manage it anymore. So 2020 I started stocks, and then the journey has been sweet. So 2020 to date, I've not lost money in any bad investment opportunity, even in cryptocurrency. I've not made any losses. If I buy any coin and the value drops below, the value I bought it at, I wait. So relatively from 2020, in fact, from mid of 2019 to date, it's been net profit. No loss any whatsoever, no sleepless night, no crying. And that's because of the experience I went through, the study I went through, the research I went through, and that's what I'm going to share with us this evening. So what is actually investing? What differentiates investing from Ponzi schemes, from pyramid schemes? Right? So investing is the process of buying assets that increase in value over time. So you could buy a real estate, for example. You could buy stocks. You could buy bonds. You could buy commercial papers. As long as the value can increase relative to your initial buying price, you can call it an investment instrument. So some investments return income. For example, you buy a building, maybe a block of flats, and decide to start renting it out maybe on a yearly basis, or decide to do Airbnb. Whatever comes to you, either weekly or monthly or yearly, is a form of return on investment. So that is cash flow kind of investment. So then you have what's called capital gain kind of investment. You buy a stock, maybe buy it for $100, and then in a year time, the stock value has gone up maybe to $150, then you sell it. So the difference between $150 and $100 is what is called capital gain. So you see the different kind of investments. So you could also invest in gold, in silver. Investing, can be for different reasons. Some kind of investment you would do for just capital preservation. So you're not just looking for capital growth. You don't want to make all of the money today. You just want, your wealth to be preserved against the valuation of Naira or against inflation. So this is what investing is. So you invest today with a mindset of reaping tomorrow. It's like planting, right? You sow today, reap tomorrow. Not tomorrow exactly. I mean, maybe 6 months, 1 year, 2 years, depending on the kind of investment opportunity. What's important is that money you are investing, there is a proof of a legitimate business that money is used for. So any opportunity that you invest in that it's not clear what the money is being used for, that is a bad investment opportunity, or maybe not bad, but bad for you. So if you do not understand what your capital is going to be used for, avoid that opportunity, no matter how juicy it is, because most often or not, an investment opportunity that is not clear, an investment opportunity that is confusing, an investment opportunity that is very complex is one that you may likely go away with your money. There's something I always say, that return on capital, in fact, sorry, there's something I always say, that return of capital is better than return on capital. So do not get too greedy that you're looking at only the interest that you're going to get from an investment opportunity, that you forget that there's a likelihood of your capital not coming back. This is why I now talk about high risk investment opportunity, mid risk investment opportunity, and low risk. So before you get started with investing in any opportunity, even if it's Sogochukwu telling you about it, there are 3 questions you should always ask yourself. Number one, how long can I do away without, number one, how long can I do without my investment capital? How long? Can you do without it for 1 year, for 2 years, for 3 years, for 5 years? There are some investment opportunities that you can get back your capital in 6 months, in 9 months, in 1 year. There are some, based on the volatility of the market, like stocks and crypto, you could invest, say, $100 today, and next month your $100 is now $90. One of the participants of my investment program, this investment program, reached out to me recently that the stock that she bought on my recommendation, the value has dropped, and it keeps dropping. I said, did you watch the classes? Did you go through the stock class? Did you go through the crypto class? She said, and that she did. I said, you haven't. So you need to go and watch it again. And this is why I always encourage us to attend sessions like this. I know that you trust me. If I tell you to buy anything, you buy it. But the risk of that is that you may overinvest. You may invest money that you're not supposed to invest in. So when you understand the nature of that investment, you can make, an informed decision. So first question I said, find out how long can you do without this money. Don't go invest your house rent or money for education in the stock market, for example. The stock market is known, to have returned profits, over the last 20, 40, 50 years. But sometimes in a very short period of time, maybe within 1 week, 2 weeks, the market can experience what is called, a dip. At that time, if you need your money, if you sell, it will be a loss for you. So second question is, how much of my capital am I willing to lose? I always say this: if you do not have the stomach, or if you cannot stomach any loss of your investment, stay away from crypto and stocks. If you know you cannot afford to lose any money, stay away from high risk investment opportunity. There's one thing I always tell people that come, to any of my investment class or join our investment club. I tell you that there are low risk investment opportunity where there is little or no chance for you to lose your money. There's mid risk where there is maybe a little bit of chance that if the risk materializes, you could lose maybe 5 to 10% of your capital. And there's high risk where you could lose 50% or even all of the capital. Yes, I always say this. And this is why I like that you guys are here this evening and here, so that you hear it. So when we tell you that there's profit to be made in the crypto market, when we tell you that there's profit to be made in the stock market, you should also be aware that there is a potential for you to lose your money. I always say it, you cannot eat your cake and have it. So the man that wants a high reward on his investments should be willing, able, and ready to take losses if it happens. So I'm not saying that you will lose money in investing in the crypto market or the stock market. Like I told you earlier, I hardly make losses when it comes to investing. So I understand that there's a likelihood of that loss to happen. So having that knowledge of the likelihood of the loss happening would guide you on how to invest. Okay? So why should you invest? Very important. Savers are losers. You cannot save your way to wealth. If you do not find a way to make money whilst you're sleeping, you're going to work till you die, or maybe till they kick you out of your organization. It is not ideal that you work hard in your early 20s, 30s, 40s, and then your 50s, you still have to be working hard to make money. No, in your 50s, you should be working because you enjoy working, not because you need to put food on the table of your family. At 50, working should be freestyle. So you can retire early and comfortably. That is one reason why you need to take investing very seriously. Time is fleeting. You're not getting any younger. You're in your 20s, you're in your 30s, you're in your 40s today. In the next 9 years, you're in your 50s. Before you know it, Tinubu's 4 years tenure is gone. And that tenure is gone again. And just think of it. 16 years ago was when we had Jonathan's first tenure. Yes, I think about 16 years ago. Time flies. Oh, yeah, that's first tenure. So if you do not start investing today, you miss the opportunity to build financial security for tomorrow. I'll say it again. If you do not start investing today, you miss the opportunity to build financial security for tomorrow. What is financial security? It is, let's look at it as a vault, such that even if any unforeseen circumstance should happen to you, you do not have to then start begging people for money to, pay your bills or for anything whatsoever. So starting today as early as possible in your 20s. See, you don't, the idea that you only live once is poverty mentality. You will not only live once. Some of us are thinking that, you know, if you start investing today, your next of kin would squander it. Let me tell you, some of you will live very, very old, right? You live maybe to 90 to 100. So it is better that you invest now so that by the time you get to 90, you have money. Than not investing now because you're thinking that you're going to die early and then you get to 90 and don't have any money. Telling you. So you lose nothing investing today, but you have a lot to lose when you don't invest now, and then in your old age you start having to call your your children to send you money. So when you start investing, you can attain financial freedom. What financial freedom? You know, you can own your own time. You can choose to work when you want, where you want, without having to send any mail to ask for a request for you to take a leave or from work or something like that. You own your own time. That's what it should be. Financial freedom. It's not about having lots of money. It's having the time to take care of your family. There's some people that they are working so hard, they're making money, but they're not there for their family. Husband is working 8 to 5. Wife is working 7 to 6. Both of them come back late. Their children being taken care of by the nanny or by herself. That's not how it should be. Even though you want to work so hard, you know that by your mid-30s or your mid-40s, you know, you get out of the 8 to 5 so that you can have time for your family. What is the yardstick behind making money and not being available for your family members? It makes no sense. It makes no sense to make money, earn money monthly, but you're not there for your family members. See, your kids, your children would grow up and leave you eventually. By the time you now want to start thinking of retiring in your late 50s, your children are already gone to university. For university, they'll marry and they'll leave you. So all of your hard work may not see to enjoy. So you need to start investing early so that you can enjoy the fruits of your labor early. You're not too young to invest. You're 19, you're 18, you're 17. Oh, I think 18 is the least you can start investing legally in Nigeria. You know, start putting something into the ground. Now, the good thing about it, starting early, is that you build that consciousness. You build that habit. So you earn 100K today and you start investing maybe 20K on a monthly basis. When that 100K increases to 500K, 20% now becomes what? 100K. Without you increasing percentage, you are investing more. Your income increases to 1 million, still investing 20% becomes what? 200K. So you see that once you build that habit, as your income increases, because I expect that as you work more, you know, you do what you need to do to become better in your business, in your career, you should earn more money. That means you invest more. Just like going to the gym. The day you go to the gym is not the day you start pushing the heavy weights. It takes time. After a while, you start building the resilience, you start building the confidence, you start building the strength to lift heavy weights. So also investing. Some of us are scared of investing in the crypto markets today. We're scared of investing in the stock market because we cannot stomach any risk or stomach any losses. That is understandable. But believe you me, within the next 2, 3, 4 years, you will find yourself investing in the stock market and crypto market. Why? Because we have built that habit. You now have more knowledge, and with knowledge comes confidence. But if you do not start, you will never become confident. Also, some people have no land, they have no stocks, they have no crypto, they have no mutual fund, they have nothing. Why? Because they are apprehensive, they are averse to risk. They cannot phantom, you know, putting money somewhere and not having it back. I had a friend, you know, he works and lives in Canada. He reached out to me recently. He wants to buy land. I recommended, you know, a few real estate companies that you can buy land from. I know this guy kept on asking me 1,001 questions. He was very, very, what's the word? was very careful about the the investments that he wanted to make. At some point I told him that, guy, see, even if you get a surveyor, you get a lawyer, they only do the best they can. There are some people that did all the due diligence that they could for a real estate opportunity, and down the line, the land was taken away from them, either from the government or from the community. So there's a limit to where we can do our due diligence. So we should not say, because we are concerned about the legitimacy of a legitimate investment opportunity, now keep on procrastinating. Because as you keep on procrastinating, time is going, you're not getting younger. So I told him that, guy, see, how much is this land said? Tell me it's 3 million. How much is 3 million converted to dollars? It's less than $2,000. Are you telling me that you cannot throw away $2,000 and sleep well? This is somebody I know that earns well in Canada. So it's not some people that earn maybe 100K, 200K, that 3 million is a lot of money to them. So, and that is why I told him that you should not bother so much about this money that you want to invest in this land. Is that you're still young, you're not even married. If you lose 3 million naira, you can make it back. So is it not better that you try now that you're young, you invest in a legitimate property? Now we have done our due diligence, we are sure, but it's still skeptical. Just do this investment. What's the worst that will happen? You lose 3 million. 3 million comes with what? Lessons. So that's why myself are usually not too careful, because when you become too careful, you will not invest. Experts will leave you. So invest early, so that when you make mistakes, when you lose money, you still have years ahead of you to make more money. If you start investing in your 40s, you start contending with children's school fees. In fact, you will not be able to invest. In your mid-40s, you have your children going to university. Is it that time not to start investing? Do you know how much it is to send children to good universities now in Nigeria? At that time, even if your income increases, it's going to be hard. Except if you are very, very rich. Now that your children are still in their infant stage or early childhood, this is the time where you need to start doing aggressive investing, because by the time they move to their teenage years, they start going to secondary school. Good secondary schools now in Lagos, in Abuja, they are not cheap. If you don't start now, you will not have the money to invest and send your children to good schools simultaneously. So now is the time. Now is the time you need to close your eyes to all these things that you see on Instagram. People buying things that just to make themselves happy. Buying shoes, buying bags, buying hair, buying phones all the time. I'm not saying you don't enjoy life, but you need to delay this gratification at some point in life. You need to, close your eyes to some of these beautiful things of life. I also love beautiful things of life, but I do understand that now that I'm young is a time where I could accumulate as much money in investment, because the time is coming where I will not have as much strength as I have today. I will not have as much skill as I have today. My skill might become obsolete. The younger people will displace me. I know all of this. You don't want to get to your 50s and start saying, had I known, like some people are doing today. Okay, so where you can invest. Very important that you understand the different kinds of investment opportunity before you put your money into it. I've said this, I cannot overemphasize it. Before you put your money in an investment opportunity, understand it. So today, we're going to be looking at 1 and 3. Today alone. No, not even 3. Number 1 and commercial paper. So treasury bills and government bonds and commercial paper. That's what we're looking at today. Other Saturdays this month, we're going to be looking at other kind of investment opportunities. So today alone, we're looking at bonds, treasury bills, and commercial papers. So if you have any questions, you can put in the chat box. I'll come back to it later. If you're just joining us, this is Academy of Investing. I'm teaching today live on YouTube how you can invest in bonds, treasury bills, and commercial papers as a beginner. First, before you go talk about investing in it, understanding what they are. Like I said, before you invest in any opportunity, it is necessary that you understand them. Not just understand because I've told you about it. but to the point where you can even explain it to another person. That is when you know you have understood it. So tomorrow you don't see your gochuku and somebody asks you, what is this treasury bills you invested in? You'll be able to tell the person, oh, this is what treasury bills is, so this is what treasury bills is, stuff like that. Okay, so I was trying to look to see if we have Laura said she did language too. Nice one. So if you have any questions, put it on the chat box so you don't forget. We'll come back to your questions later. If you are getting value so far, type in the chat box, I'm getting value. If you're just joining us on YouTube for the first time, don't forget to like and subscribe to this channel so that you can get more of this premium value, premium knowledge in the course of the week. I share short videos time to time, apart from coming live on YouTube. Okay, so I'm not seeing any comments in the chat box. I need to know that you guys are following me. Okay, so we'll go ahead. So Treasury bills. T-bills is a debt instrument issued by the Debt Management Office of Nigeria. So whenever you hear DMO, right, just know that it means Debt Management Office of Nigeria. The Debt Management Office is responsible for managing the local, debts raised by the government. Now, Treasury bills is a way of the government borrowing money from the public. Instead of going to China or maybe US to borrow money, what they do is to borrow money from the economy. And they do that for two different reasons, a couple of reasons. One of them is to manage inflation rate. So when the government releases treasury bills to the public to invest in, that helps to take away money from circulation. So you already know that basic economics, when there is more money chasing fewer economic, when there is more money chasing fewer commodities, price goes up. So if you want to manage the price going up based on increasing demand, what you could do is to reduce money supply. So sometimes it works technically in advanced countries, like US, Canada. Such monetary policies work when the government reduces, interest rates. It tends to affect how people, buy things in the economy. When the government, releases treasury bills, it tends to manage inflation and stuff like that. So treasury bill is backed by the full faith of the federal government of Nigeria. What does full faith mean? It means that we can't default. If worst comes to or push comes to shove, the government is not able to raise money to pay back investors, they'll borrow money from CBN. So I've never heard of a time in Nigeria when the government failed to pay back investors in treasury bills. I've never heard. I don't think it can ever happen. Okay, so you have the opportunity to get your interest upfront. So if you look now on this table below, this is a typical structure of how you could see the publication of a treasury bill. So here we have auction dates. So treasury bills are usually auctioned, right? Like in a market, but not the typical market where you buy commodities. It's in a financial market. So buyers and sellers come, they bid, right? Some people can decide to say, oh, I want to buy 1 million units, I want to buy 2 million, depends. They'll bid, and before they will land on, the price for the day. So here we have auction dates. Federal government does auction, I think, twice a month in the primary markets. Now, there's primary market for big boys. People that have 50 million can invest directly in the primary markets. If you do not have up to 50 million, then you need to consider the secondary market. So secondary market is where you see different offers during the week. It's not limited to twice a month. So depending on the stockbroker you use, some stockbrokers have an app where you can see the treasury bills that are available to invest in on a weekly basis, not even on a daily basis. An example of such stockbroker is Afri Investor. If you're an ML community, if you have been with us for at least 2 years, there's no way you will not know Afri Investor 2.0. Afri Investor is one of those apps we use in investing in multiple investment opportunities in Nigeria. Okay, so you see the allotment dates here is similar to the auction date. Sometimes the day that they bid the auction is not the same day that they allot it to the buyers. Maturity date is, the expiry. Every investment opportunity has a tenure. Some investment opportunities are 3 months, some 6 months, some 9 months. So you need to find out how long is this opportunity. When would I get my capital back? If this tenure is too difficult for you to calculate, just ask them the dates. You can see here, there's 91 days, there's 182 days, and there's 364 days. If you calculate 182 days from 13th of June 2024, it will land you at 12 December 2024. So it's good, So the offer here is how much for that 91 days bill is the government selling? How much are they selling? How much are they selling? So you have here 5 billion, right? So another one here, 6 billion, and so on. So you can see here the stop rates. So stop rates is the same thing as the interest rates. Interest rates here 16.3% for 91 days, 17.4% for 182 days, and 20.5 for 364 days. This is prorated, though, it's per annum. It's prorated per annum. So if you want to actually know how many percent it is, you have to calculate relative to 365 days. So what you do here is 91 days over 365 times 16.3 to get the actual percentage for 91 days. Okay. Another type of investment opportunity that's also low risk is bonds. So you have corporate bonds and you have government bonds. Corporate bonds is issued by established companies, right? Like MTN, Dangote, and Co. But most of them don't do bonds in Nigeria, they do commercial papers. Aside of corporate establishment, you also have government. So the government releases bonds, and the federal government, created what they call the FGN Savings Bond in 2017 for people that do not have high capital to invest in treasury bills. Because even for treasury bills, if you want to invest in the secondary market, you need to have a minimum of 100K. But with FGN Savings Bond, the one on the right-hand side, you can invest as low as 5,000. So you can see here, you have 2 years tenure on the right hand, you have 3 years tenure. So the good thing about the FGN Savings Bond is that you get paid your interest quarterly. So if you're looking at recurring, passive income, you could decide to invest monthly this year, and then next year you'll be getting paid every month interest. That's the beautiful thing about the FGN Savings Bond. So open to people that don't have high capital. It's also a fixed income kind of opportunity, meaning that whatever percentage that they declare during the publication of that offer, that is what you get at the end. No Cambia, no changes, no stories. It is not open to volatility in the stock markets or the crypto markets or in the financial markets. Whatever you invested and they told you would get is what you will get. You see, it is very low risk. And I recommend this for high income earners that do not want to invest in the stock market or the crypto market, because you cannot stomach risk. You have 2 million, 3 million. Instead of leaving into your bank account, invest it in FGN Savings Bond. Zero risk. Some people say zero risk. Me, I say it's very low risk, right? Because since 2017 up to now, there has not been any defaults. No defaults. Another one is commercial paper. So commercial paper is a debt instrument similar to treasury bills, but the difference is that commercial paper is issued by large corporations, not governments. So it doesn't have the same risk level. Treasury bills is low risk. Commercial paper is low risk, but not on the same level. How do I mean? Commercial paper is issued by established companies like, MTN, Dangote, Boa, and Co. Anything can happen to Dangote tomorrow. You don't get any money back if Dangote should shut down tomorrow. You don't get any money back. The first person that Dangote is going to return money back to is creditors. If they file for bankruptcy today, shareholders get nothing. Commercial papers holders get nothing. The only people that will likely get something is creditors. So this is why I always tell people that commercial papers is not absolutely low risk. So the low risk is relative to the company. Somebody reached out to me recently when Access Bank and Dangote Sugar commercial paper closed, that there's another one available that she's considering investing in it. I said, I do not know this company. I don't know it. So commercial paper is not commercial paper. Commercial paper differs according to the credibility of the company. You can see there's something called here issuer rating. So the issuer rating for different commercial papers from different companies, or the issuer rating differs from company to company. So don't go and say, because Ogochukwu said you can invest in commercial paper, you just see one commercial paper. You don't even know what the company is doing to make money. You gotta invest in it. Anything happen. Or I don't tell you, say some commercial papers are not good to invest in because the companies are not resilient enough. A company like Access Bank that have been around for over 20 years, what's the worst that could happen to Access Bank that I have not experienced already? What's the worst that can happen to Dangote Sugar that I have not experienced already? What's the worst that can happen to MTN that I have not experienced already? So these are the things you need to factor in before you invest. Like I told you earlier, before you put your money in any investment opportunity, you need to understand how they make this money. So why do these companies issue commercial paper? It's a short-term debt instrument for them. Instead of them going to the bank to go and borrow money at a higher interest, they come to us that there's no collateral. If the money goes, it goes. They don't need any collateral. The collateral is their brand image. That's the collateral. But if they go to the bank will ask them for collateral. So it is easy money for them to come to the public to raise. This is what some people don't understand. It's a game. I told you that. Those of us in the community must have heard me say this thing. Money is a game. Bankers know how to play it very well. I mean, bankers are the top level, not the ones at the front desk. Most people front desk, cashier, they don't understand money. So these large corporations, they know if they go to the bank will give them a high interest and also ask them for collateral. But they come to the public, low interest relative to what bank is charging, and also no collateral, easy money. If anything happens tomorrow, they walk away. Investors already have been told that there's no guarantee. So you need to understand these things. So commercial paper is like you investing in your friend's business. But the difference between you investing in your friend's business and investing in a company like MTN is that your friend's business likely has no credibility. He doesn't even know the difference between revenue and profits, or difference between cash flow and revenue. But when you invest in a company like MTN, they have financial consultants, they have risk analysts, they have a team of people that know how to make money, make more money. They have been doing it for over the years, even before you were born. So these are the things you need to understand. Don't just wake up and say, hey, my friend has told me you will give me 60% if I invest in business for 1 year. I don't get excited. Some of my friends come to me and tell me of a business opportunity and that I should invest to give, and they are shocked that I'm not excited. Why should I be excited? Do you know how to manage money? Why should I be excited? Like you tell me I should give you 5 million and you give me 50% in 6 months. I should be excited. I'm sad that you're giving me that opportunity. that opportunity will likely turn my 55 million to 0 million. So I can't be excited. So when you understand that multiplying money is not as easy as people make it seem, you would know that any juicy opportunity that comes to your ears, the first thing to say is no. Before you start thinking of it, first, no, I'm not interested. Then you now go and give the second thoughts. If you are giving a second thought, it now makes sense. I'm saying, oh, I gave it a second thought and I thought that, okay, it's a good idea. Let's go ahead with it. Don't just get excited because it's 26%. No, those are for the masses. Those of us that join Money Lessons Live, those of us that are in investment club, you are in ML community, you cannot be investing like the masses. The masses do not care how the money is being multiplied, but you have to care so that tomorrow, if I'm not there, you will know that since there's no MCN, there's no Access Bank, but there's another opportunity. I will use this information that I've gathered here today, the knowledge I have today, to make an informed decision at that time when I'm not there. That's it. So investment is not for lazy people. You can start your investment journey the lazy way, but you cannot remain lazy. I have a program called Lazy Investor Program for lazy people. In fact, that program has shocked me. Some people are lazier than I designed that program. A program that requires you just go through 1 hour recorded classes and attend 1-2 live classes every month. Some people are not even attending it, and they paid 50K to attend. They refuse to attend because they don't see it as necessary. They just want me to tell them what to do and they'll do it. Come on, that's okay in the beginning, but it's not okay in the next 1 year. I shouldn't have to be feeding you. I don't want babies. I want people that will go and teach other people. So that's why I spend my time in teaching. If I was a greedy person that just wants babies around me, I will hoard all of this knowledge I have. And so that next year you come again so that I'll tell you what to do. But I don't want that. I want more knowledgeable people out there. Okay? So now, let's compare CPs. CPs means commercial papers. Let's compare commercial papers. F bonds means FJ service bonds, and T-bills. There are some similarities between them. Interest. You know, for commercial papers, you could get your interest upfront or at the end. When you get your interest upfront, you know, you get less return, a little bit less, not so much significant, a little bit less. Let me explain here. Look at what it is here. So this 22.65%, when you invest ₦1,000,000 and you want your interest upfront, that's 22.65% is say 220,000. But what actually the company is going to get is about, let's say, 880,000. So the interest is on 880,000, not on 1 million. But when you wait till the end of the tenure to get your interest, both that interest on that 880,000 and the interest on the accrued money, so that your interest that you did not take back, they will give you another interest on that interest at the end of the tenure. That's the difference. So that's why if you think that you don't need the money, you can wait to the end. Like I said, it's usually very significant. That's the difference between 25 and 22. It's about 3%. And this is prorated though. This is 6 months. So 180 days over 365 days times 22.65% to know the actual percentage. Okay? Questions can come later. Anything I've said that's not clear, ask me questions. I will explain more. We're almost getting to the end. So you can get your interest upfront or at the end. For FJ service bond, you can't get your interest upfront. It is quarterly. You get your interest quarterly. Okay? Then for T-bills upfront, right? You can also get it at the end if you want. You can reinvest. So the stockbroker will ask you, do you want to reinvest your interest? You say yes, that means you get your interest at the end with some interest added to that interest, like I explained earlier for commercial paper. Now, the tenure for commercial paper is usually 180 days or 270 days in Nigeria. FDI service bonds tenure is 2 years or 3 years. If you sign up to 2 years for FDI service bond, you get interest 8 times. If you sign up to 3 years, you get interest 12 times every quarter, meaning every 3 months. Risk level, commercial papers, like I told you, depend on the companies. You range it from low to high. Like the one that was sent to me recently, I told the person I don't know the company. To me, that is high risk. I don't know the company. I don't want to go and start digging about the company. I don't get power to do the research. So I avoid it. FDI service bonds, very low. Very, very low. You can invest and go to bed. If you have 50 million, put it there and sleep. T-bills, low as well. The issuer for commercial papers, large corporations, issuer for FDI service bonds, federal government, T-bills, federal government, capital for commercial papers. For the face value, most commercial papers will tell you 5 million. Like you can see here, 5 million. But some what's it called? Some stockbrokers would give you the opportunity to invest. Some stockbrokers will give you the opportunity to invest 1 million. Yes, like this Access Bank and Dangote Sugar that came up 2 weeks ago. Some people in my investment club were able to invest as low as 1 million. We contacted the stockbroker through other means instead of the fund that's open to the public. So we're allowed to invest 1 million. Some people invested 1 million, some people invested 2 million. Okay, so FDI service bond is 5K, 5,000. Now, I do not recommend investing 5,000 naira in FDI service bond. That money is too small. Even though the government has said you can invest it, it's too small, right? You rather put that money in one of these fintech apps than putting it there. 5K, if you lose 5K tomorrow, you sleep fine, right? So there's no need putting it in a low risk environment. Put it in a high yield investment app like PiggyVest, Moneyback, NiceVest, than FDI service bond. So my recommendation, FDI service bond minimum is 100K. If you're not investing 100K, I don't think you should do FDI service bond. Look at other opportunities, right? So Treasury bills is 50 million for primary markets, but secondary markets you can invest as low as 100K. Where to buy CPs, bonds, and treasury bills? You can buy treasury bills from the commercial bank if you are doing primary markets. I think UBA, First Bank, and a couple of other banks sell treasury bills at primary markets. Price is usually higher than secondary markets. The rates for primary markets usually higher than secondary markets. Secondary markets is people that bought the primary markets that want to resell before the tenure ends. So yes, if you buy treasury bills from primary markets and you want to sell off before the tenure ends, you can. Apart from treasury bills, which you can buy from commercial bank, commercial papers, T-bills, and bonds are bought through stockbrokers. Stockbrokers like Afri Invest. That's number one recommended in the ML community. They have been around for about 19 years. So they have a very strong reputation and a very good customer care service. I've not had any issue in the last 3 years. I'm recommending people to them. That's why I recommend them. I don't get any kickback from them or nothing. All these financial companies like Afrinvest, nothing I get. So I'm just telling you guys, go and use them. It's a recommendation, right? So Bamboo sells treasury bills. I think you can invest as low as 100K. sometime last year in ML community, I told people that I don't recommend bamboo for treasury bills. Person was like, why? I said treasury bill is supposed to be a low risk opportunity. I mean, low risk. Bamboo is a high risk, environment. They invest mostly in the stock markets. So if you are trying to diversify your risk, you should not be investing both in stocks and in treasury bills in the same place. I don't know if it makes any sense to you. So let's tell us that we should, spread our bread upon the water. So when the scripture talks about it, do not put all your eggs in one basket. If you know you are buying T-bills to diversify your portfolio, it doesn't make sense that you are buying it on Bamboo app. Bamboo app will tell you differently. I'm the only person that can tell the truth to these things. So don't go about investing in such a way that if one company shuts down, you lose all your capital. That is not wisdom. So maybe you want to do treasury bills. After Invest also do treasury bills. Secondary market, I think the minimum is 100K as well. They open between 10 and 2 o'clock every day, right? Monday to Friday. Go on the app, you see it there. Between 10 and 2 o'clock every day. So this is something I've never said anywhere. Even in my community, I've never said it. I've been asking people to pay me to tell them this simple thing. It's there on the app. If you go by 8 a.m., you will not see it. 9 a.m., you will not see it. 10 a.m., you might not see it. By 10:10, you see the offers. Information is key. I learned very early in life from one of our popular pastors in Nigeria called David Ibiumi. He said that information seekers and dedicated readers are men and women of impact. I don't read as much as some persons, but when it comes to information, I'm ahead. Most of my peers, most. I'm saying this with all pride. So you say, oh, God, is prideful. Yes, for this one reason, you can call me prideful. I'm very, very informed. As long as that information results to making more money or growing money, I know too much. Why? Because I spend time in seeking information. So you may be wondering what have I learned here this evening. If you not learn anything, know that you can buy treasury bills on Happy Investor between 10 and 2 a.m. every day, 100K minimum capital. Okay? There are different offers you see. You see 91 days, 84 days, 364 days. It's secondary market, so it's not fixed. You will not see a fixed number of days. If you're an investment club, you want more understanding to whatever you see on Monday when you go there, screenshot it, send it on investment club. I would explain. If you're not investment club, don't message me. I will not answer you. Okay? So fintech apps, you can buy treasury bills there, like I said earlier, like Bamboo. There's another fintech app for buying treasury bills. It's called wealth.ng. I used to recommend it like 2, 3, 4 years ago, but I haven't used them in a while, so I don't know if they are still in existence. Determine your investor profile. I'm not going to teach this evening. I've almost exceeded the 90 minutes allocated for tonight, so we will do this next week. I've thought about this a couple of times. If you have attended this investor blueprint webinar or any of my investing webinar, I always teach this. No two investors have the same risk appetite, and as such, they should not invest the same way. We'll talk more about this next Saturday. So with the last bus stop for tonight, what every new investor needs to know: invest your idle cash so that village people will not collect the money. When you invest and people start calling you to send them money for one urgent financial need or so, when you go to your bank account and you don't see the money there, your conscience, is going to be feared. Because some persons, we're helpless givers. We love to help people. I have, one of our community members reached out to me recently on a one-on-one session. We're talking, and he told me of how he doesn't know how to say no to his family and friends and all of that. And I asked him one question: if you die tomorrow, do you think these people are going to die along with you? He was mute. So some of us, we don't have the tolerance to say no. So what you need to do is to take the money away from your bank account and put it somewhere that when that request comes in, when you think of the process to get the money out, you just give up. right? So that's the strategy to employ. This is why I tell you, pay yourself first. So immediately you get your income for the month, take that money out and invest it. Don't think about it twice. It is dangerous to think about it twice. As long as it's a certain percentage you have defined. Those of us in our investment club, you know, they know that there's a certain percentage that they are supposed to invest every month. So when you have reached that time of the month, you get paid, you don't think twice about it. The only thing you may be thinking is, what is the recommendation for the month? Because in our investment club, I recommend the assets to buy every month, especially for stocks and crypto. So you may want to know which one should I buy. But before you even get to hear from me which one to buy, you already funded your crypto or your stocks wallets. So anybody that comes, you tell them, come next week or come next month. So investing would help you to imbibe financial discipline. So what you need to know as an investor is diversify your investments. Do not pour your investments in one basket. Keep on investing. Never stop investing. Investing is a marathon and not a sprint. It's not the day you start investing that you start profiting from it. It takes time. Avoid get-rich-quick schemes. Lots of people, not lots, a few people have made money via investing in Ponzi schemes, but you would likely be unlucky. So do not go and try because other people try. Avoid bets Nigeria, avoid sporty bets, avoid forex trading, avoid futures trading. Avoid any opportunity to make money in an unsustainable manner. Any method of making money that's not sustainable, that is not repeatable, it is a bad opportunity. You will likely not be fortunate like many other people have. All right, so this is the end of tonight's session. So those of us that are not in our investment club, this is the premium club of our community. If you're an ML community and you're not there, I think it's the first time I'm talking about it publicly. It is good that you join us so that you can become more accountable. You can get bespoke recommendations, advice, guidance, you know, and grow your wealth over time. Now is the time for questions. So if you have any questions within the next 10 minutes, I can take. Otherwise, it's going to be bye-bye for tonight. All right, so I'm waiting for your questions. For those of you that are just joining us for the first time on Money Lessons Live on YouTube, you're welcome. Good to have you. But we have reached the end of the road for tonight. So you can like and subscribe so that by the time we drop short videos later in the week, you get to watch them. The journey to financial sense, to improving our understanding related to money, investing, wealth creation is a continuous one. So all that you have learned today is not sufficient to change your mindset. You need to keep hearing and hearing and hearing and hearing so that you can continuously make sound financial decisions with your money. So I'm trying to see if we have questions. Okay, so I can't see about, is there any questions? All right, so no questions so far. I'm going to wait for another 2 minutes. Those questions you have had about investing, even if it's not relating to what I've taught this evening, use this opportunity to ask now. Okay, so Achiever TV says that everything was you explained was clear and direct. Thanks so much for the impact. I'm glad you got value. I'm glad you got value. Okay, so you could take a screenshot and put on your status or share on the ML community that you got value this evening. That will give me some, some motivation for next week. All right, so we have here, I never really understood what commercial papers TVs were. At least with the knowledge gotten here tonight, I'll build on this and read more about it. Beautiful. So yeah, that's the thing. I talk about investing, about financial education. You can't learn everything from me. The parts you've had will not give you the foundation to go and dig more. Sometimes because you don't even know what to search for, you might search and miss. But now you have the basic and the fundamental understanding of what treasury bills is or are. You can now dig more into finding more value as regards it. Okay, so that's beautiful. So sounds like everything I talked about this evening was very clear. Next week, we're going to be talking about mutual funds. So mutual funds, anyways, let me leave it for next week. So mutual fund, we're talking about mutual fund next week. We're also going to talk about the investor profile, like I tried to show earlier. I'll show you how to, diversify your portfolio as well, how to manage your greed and fear in the financial market, and much more. So for now, it's been a beautiful evening having you guys join us. Thank you so much. And I'm going to see you next week. Don't forget to like and subscribe so you could get more value from this channel in the coming days ahead. All right. Bye, everyone. See you this time next Saturday.